Welcome to the Investing Podcast, presented by Tusk Media. Now, for your early morning look at financial news and activity in audio and video form, here's the Morning Market Mimosa.
Good morning, everybody. Welcome back to the Investing Podcast. Today is Wednesday, August 17th, 2016. I am joined here by Mr. Ben Nye, the investing guy. Ben, how you doing this morning?
I'm doing well. How are you?
Great. All right. Jumping straight into markets. Dow futures down 6 basis points. S&P futures up 1 basis point. NASDAQ futures up 10 basis points. Gold down 57 bips, and oil is down 28 basis points. All right.
Yeah, so interesting, a very flat morning.
Yeah.
Not kind of anything. I was looking just on my normal morning screens. I looked at Shanghai, and that was not doing anything. And look at currencies; they're not moving too much. Yen still not trading just above 100. 100.69 right now. Euro 112.73. Pound 1.3016, and it's kind of traded in that range ever since Brexit. Not really breaking out one way or the other, which it's kind of that holding pattern. People don't really know what's going to happen with the Brexit. So not much happening in the markets this morning, but we did get some corporate news. Got quite a bit of corporate news.
A lot of earnings still coming
Yeah, a lot of earnings. Well, it's retail season, because retail is always delayed about a quarter, because they try to get the Christmas and the New Year's all rolled into one. So their quarters don't usually finish until January. So today we got, yesterday we had Home Depot, and they had a pretty solid earnings announcement. And then today we got news from Lowe's, but they actually have missed on their comp store sales.
They're down big time in the pre-market.
They're down big, and when everyone saw the Home Depot number, probably said, I'm pretty safe in my Lowe's investment. But this morning, Lowe's just can't perform the way Home Depot does, and it's very interesting. There's a big push about, now, is there really reversion to mean when you're talking about companies in the same industry? And I think common thought is yes, over a long enough time period. But right now, Lowe's just can't get it together the way Home Depot is doing. Target as well.
Target's down also.
Classic though, classic. A better than expected result, beat on EPS, and then they brought down the rest of the year. It's like, you can't get the beat and raise. That's that's the kind of holy grail when you're reporting a quarter. But their call is at 9 a.m. Probably checking on that a little later on. American Eagle, another one. You just had all these good announcements from Nordstrom, Macy's, and Kohl's. And now American Eagle comes out, and they beat again. The Aerie brand was the main driver of the beat, which is a smaller percentage of their sales. Their core American Eagle brand only had a 1% uptick in comp store sales, and the street was looking for 1.5%. And given the stock rally that they've had over the past few months, they really have to hit on all numbers in order to justify that. So tough morning for some of those retailers, but we'll see how they trade. It'll also be interesting to see how the ones that did beat just a couple weeks ago, how they trade in response to this as well.
All right, jumping into Facebook.
Yeah,
What's going on with Facebook?
Headline in the Wall Street Journal this morning, apparently they're giving 1.5 points. So jumping back a little bit, when Facebook makes a hire, they incentivize their recruiters by giving them points. So a recruiter who hires somebody, they get 1 point. And about a couple of years ago, they started instituting a policy. They said, we need to make a more diverse workforce. So they gave their recruiters 1.5 points if they hired a minority. But that didn't actually have any effect. So now they're doing 2 points, and that's still not having much of an effect. Their current workforce is, and I wrote some of these numbers down, 4% Hispanic, 2% Black, and 33% women. And they want to increase the number of those minorities, I guess because they think it'll make them a better company. I don't know. So Facebook in the headlines again, after they so conspicuously messed up last night on our podcast. We were trying to do a Facebook Live.
And it just was not working.
I mean, come on, when you have 15,000 of the smartest people in the room, you got to make Facebook Live work. I mean,
Right, and we had 15 million very upset viewers that were trying to come and see the investing podcast.
Yeah, I mean, we would have hit 15 million for sure.
For sure. That's
If-
on the
if
low end of
Facebook
our range.
Exactly. So, Facebook, come on, get it together, guys.
They lost Justin Bieber. They're losing our interest through Facebook Live.
Right.
Just not looking great.
They hit 134 after hours on their earnings, and they haven't been above 130 since. I mean, come on.
Yeah.
Come on, Mark.
All right, next we will talk about Stem Cells Incorporated.
Yeah, I'm just in the mood to beat up on Silicon Valley companies today. So Stem Cells is is based in Palo Alto. And their description is that they are working on clinical development of purified human neural stem cells for the central nervous system. So a lot of hot buzzwords. What's not hot is their stock price. They have a $30 million market cap. So yesterday the news was, so first of all, they have the CEO, who's also a president, who's also the secretary, who's also the general counsel, who goes by the name Ken Stratton Esquire.
A man that does not sleep, apparently.
No, and you gotta love the Esquire name. I think Ben Nye Esquire has a pretty catchy ring to it.
We may introduce you as that tomorrow.
I gotta lengthen the name, man.
Yeah.
It's like Ben Nye, it's 6 letters. So you gotta put Esquire behind it, give it a little more gravitas. So yesterday the big news was they were merging with an Israel company by the name of Microbot Medical. And your hackles start to get raised when you read the comments in the press release that say, "We're pleased that this transaction will give us a presence in the U.S. capital markets." They're not even being bought for the tech. They're being bought so they can raise money in the United States.
Right.
So
And I believe their stock price jumped something like 900% yesterday.
yeah, from
started
like
at
2 cents to 10. That's
Yeah.
not accurate, but you get the idea.
Yeah, it was a very, very big day yesterday. for them.
They did a 1-for-12 reverse stock split. The microcap world can be a little bit of a seedy place sometimes. And I think, when you have big reverse stock splits, when you have one guy who basically is the company, whose last name is followed by Esquire, who does a merger with a private Israeli company, this is just kind of some of the things that happen in the capital market. So also after the close yesterday, at 5:30 p.m. Eastern time, so when everyone is just about ready to go, they release in an 8K, so not even in a press release, that they are now lowering the exercise price of the outstanding warrants to $1.10 per share from $10.20 per share.
A very, very big spread.
So now all of a sudden people can purchase the stock at $1.10 rather than $10.20, which the warrants had initially suggested. So I'm not sure if that's the most shareholder-friendly thing. We'll see what happens with the stock.
They're also down big in the pre-market activity.
Yeah, and based on an 8K like this, that doesn't surprise me at all.
Right.
So we'll see. We might check back in with these guys. I don't know. Maybe it's not really worth our time with a $30 million company. But we're just trying to broaden your investment horizons on the Investing Podcast.
No doubt. All right, everybody, we will check back with you at lunchtime.
Cheers.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.